Hello and welcome to myfinanceteacher.org. In this video, we're going to have a quick look at what's happening to gold, but more importantly, we're going to have a look at a long-term view of gold price. And the reason for looking at a long-term view is a couple of really interesting comments that I got from the viewers on YouTube. Firstly, this really interesting question, and it's not a stupid question at all. It's a really interesting question. What would be the price of gold in 2021? In one of my previous videos from a couple of years ago, I was calling for the price of 2021 by the year 2021. And gold has obviously already exceeded that target. So I would modify this question a little bit. What would be, in my opinion, gold price over the next couple of years, let's say into 2022 or 2023? So we're going to talk mostly about this in this video. And another really interesting question, which made me laugh quite a lot, is, well, maybe gold price by next year have to settle back down to 2021 because it has already exceeded that target. So that was quite funny. Thanks for your comments, guys. I really appreciate them, and let's jump in. So firstly, having a look at a short-term view of gold. As I've mentioned in quite a few of my previous videos, all the way since the middle of July, gold is overbought. And yes, since then, gold has actually performed exceptionally well. And here we just need to remember that, well, nobody knows the future. What we're trying to do in our analysis is decide whether you want to be aggressive when the risks are relatively low based on probabilities of what might happen in the future, or whether you want to be cautious when the risks are relatively high and the assets are overbought. So at the moment, I think caution is advised. The short-term daily cycle has been going on for 66 days right now. Usually these last around a couple of months. So I think over the next 1 or 2 weeks, we will probably see gold price come down, maybe down to this 50-day moving average. That would also be close enough to mid-July highs. So somewhere close to 1800, maybe 1820, I think is a nice possibility for gold over the next, well, let's say a couple of weeks. As we see, RSI has started to decline a little bit, but it's still relatively deep into overbought at over 78. And it was as high as 89.8 just a few days ago. So gold has been noticeably overbought, and I think some cooling down is required relatively soon. That's within the short term. Within the intermediate term, the intermediate cycle is also relatively old. It's at 143 days old. That's over 4.5 months or so. Usually these last for about half a year. So I think over the next couple of months in the intermediate term, we'll also likely going to see relatively lower gold price. After gold finishes the ongoing short-term daily cycle, there might be another bounce up into the next daily cycle, followed by the decline into that end of the ongoing intermediate cycle. And that's probably going to happen sometime over the next, well, a couple of months based on the usual average duration of these intermediate cycles. In the longer term though, I think gold is going to perform exceptionally well, and I will try my best to accumulate as much as I can without forgetting some level of diversification, of course, over the coming couple of months. So that's my outlook in the short to intermediate term. Next, to confirm on my outlook a little bit, looking at gold optimism index, currently it's at 82, and actually back on Friday it was even as high as 84. That means that there is just a little bit too much excitement, too much optimism, too much euphoria about precious metals, about gold price, and that's not usually the time to enter heavily into the market. That's usually the time to be cautious. The last time optimism index was as high as it was on Friday was nearly 9 to 10 years ago, back in 2011, relatively close enough to that previous all-time high in gold price. So this index also tells me that some caution is advised at the moment. Personally, I still have just a little bit of positions in silver-related assets, but I think over the next several days, stop losses on those positions might actually be triggered. Now, let's move on to this question of a longer-term view of gold price. So say a forecast into 2022 or something like that. So let's have a look first at this longer term chart. This is a monthly chart. I'm going to base my forecast into 2022 on the relationship between this chart of gold price going back to early 2000s and the money supply that's from the Fed also going back to early 2000s. I'm going to look at the relationship between money supply and gold price, and I'm going to look at this relationship at just a few key points. Firstly, we're going to look at this relationship between money supply and gold price at the beginning of the previous bull market in gold. That's in the middle of 2001. Our next key point is going to be somewhere in the middle of this previous bull run in gold price. Let's take somewhere in the middle of 2006. Next quick look at money supply M2 and gold price would be around these previous all-time highs. That's August to September 2011. Then we're going to look at how gold was doing in relation to that money supply at this bear market bottom at the end of 2015. And the last key point is going to be around July-August 2020. So what I'm going to do is I'm going to chart money supply versus gold price just at these key points. And what we get is a chart like this. Let's have the gold price on the vertical axis and money supply M2 in the US on the horizontal axis. One thing you could point out here is that gold price might actually depend on the total amount of money printed in the whole world rather than only the money supply in the US. But in this case, let's just treat this US money supply as some proxy for the worldwide money supply. And over these 20 years, the US monetary policy hasn't been actually as accommodating as it has been in some other countries. So I don't think this forecast is going to lead to too much over-exaggeration, just because we are looking at the US as a proxy for global money supply. So what we get is these 5 points. Back in 2001, gold price was somewhere around $260 and money supply was somewhere around $5 trillion. In 2006, gold price was up to $700 when money supply increased up to nearly $7 trillion. In 2011, of course, gold price was close to $1,900 with money supply close to $9 trillion. At the end of 2015, gold price was down to close to $1,100 only, with money supply still growing to above $12 trillion. And recently gold price broke $2,000 with current money supply above 18 trillion. How crazy is that? So just based on these 5 points, we can get a trend line. Of course, one would expect a positive relationship between the amounts of money that our governments are printing and gold price. And based on this trend line, you might see that sometimes gold is undervalued. That's when the gold price is below this trend line, as it was in early 2000s, of course, just at the beginning of the previous bull market, and as it was in late 2015. It was, of course, undervalued. And it was overvalued in 2011, as on this chart, gold price is considerably higher than this trend line. So think of this trend line as some sort of fitted or expected gold price based on the money supply. And if we try to plot that gold price, what we get is the red line over here. Blue line is the current ongoing gold price, and the black line is the extension, is the stretch, is this over or undervaluation of gold price compared to the fitted price that would be based on the amounts of money that governments are printing. So as we see back in early 2000s, undervaluation was 56%. Back in 2011, overvaluation was 74%. Which later dropped to an undervaluation of 22% in 2015, and even now at the gold price of $2,000, due to the huge amounts of money that has been printed, especially recently, gold is still undervalued. It's 4% below the fitted or fair or call it expected gold price that we should see based on the amount of money that the government is printing. During this ongoing bull run, as you see from late 2015 up until now, this undervaluation has dropped from a 22% undervaluation to only 4% undervaluation. And as the ongoing bull market in gold continues, I think this undervaluation is going to turn into overvaluation. Whether the stretch is going to reach 1.7 or 70% overvaluation again or not over the next couple of years, that remains to be seen, but let's say this stretch reaches to, say, 50% overvaluation. What would that project in terms of the gold price? Well, let's see. That depends on the total amounts of money that will be printed over the next couple of years. At the moment, the US is at $18.3 trillion. If over the next couple of years the governments, for some magical reason, stop the printing press almost entirely, no more memes of printing press going brrr. If somehow over the next couple of years money supply only increases to 19 trillion, that's less than 4% increase in a couple of years. I don't think that's very likely, so this is a very, very conservative scenario. So if that is the money supply, in that case, fitted gold price or expected gold price based on the money supply, would be around $2,200. Based on the trend line more specifically, that fitted gold price would be somewhere around $2,170. But if the actual gold price is stretched above that, as it was in the previous bull market, if it's only stretched by, let's say, 50% above that rather than by 74% as it did last time, then that would project a future gold price of over $3,000 in the next few years. So for that, as well as for some other reasons, I'm still extremely bullish on gold over the longer term. Although I still think that in the shorter term, some cool down is very likely, and I've probably drawn this a little bit too low. I don't think the cool down is going to bring prices that low. So if you like our projections of gold price based on the money supply, check out some more of our analysis at myfinancesteacher.org. And in the next couple of days, I will also look at a similar analysis of gold price based on a more important data. Rather than money supply itself, which affects inflation, which in turn affects gold price, I'm going to look at inflation itself. What would be the projections from, let's say, CPI for the gold price over the next couple of years? So if you want to have a look at that, as well as similarly valuable analysis, join us at myfinancesteacher.org for nearly daily updates on a range of assets. Besides my regular updates, I also have a colleague who writes weekly newsletters where he shares his extensive investment experience that he's accumulated over decades. And if you want to see gold price around that 3,000 mark over the next couple of years or higher, I think you know what you're going to do. Hit that like button and subscribe to the channel if you haven't. That's all for now. I hope you had a wonderful weekend and I wish you a very nice day. Good luck in your trades.